Gold has smashed through record highs this year, and everyone's asking the same question. Why is gold suddenly exploding in value? In this video, I'm going to break down the real story behind this rally so you can understand what's really happening. So let's dive in. Now, gold isn't just another commodity. For thousands of years, it's been seen as the ultimate safe haven. It doesn't depend on governments paying you back like bonds, and it doesn't rely on company profits like stocks. It's simply gold, unchanging, solid, and trusted. And when the world feels uncertain, investors run to it. So what's driving the rally right now? Well, the first big reason is interest rates. Over the past couple of years, central banks like the Federal Reserve hiked rates aggressively to fight inflation. Now, normally, high rates hurt gold because you can earn a safe return just holding government bonds. But the latest US jobs and economic data came in weaker than expected, and markets now believe the Fed will start cutting rates soon, maybe even half a point cut at the next meeting. Now, when rates fall, bonds lose their shine, and suddenly gold looks much more attractive. The second reason is the US dollar. Gold is priced in dollars, and dollars has lost about 10% of its value this year. Now that makes gold cheaper for buyers outside the US, which sends demand through the roof. The third reason is politics. Right now, there are growing worries about the independence of the Federal Reserve, with President Trump openly clashing with the Fed. And on top of that, we've got ongoing wars, trade disputes, and global uncertainty. Now, when investors see risk piling up, they look for a safe bunker, and that bunker is gold. Goldman Sachs even warned that if faith in the Fed drops further, gold could rocket toward $5,000 an ounce. Another powerful force is central banks themselves. Countries like China, Turkey, and India have been buying gold in record amounts. They want to diversify their reserves away from the US dollar, especially in a world where financial sanctions and currency risks are in the spotlight. In fact, gold has now overtaken the euro in central bank reserve holdings for the first time in decades. That kind of consistent buying creates a strong base of demand that keeps prices rising. It's not just governments driving demand. Investors are pouring money into gold ETFs, exchange-traded funds that hold the metal directly. That squeezes supply even further. And it's not just gold shining. Silver has been rallying too, showing how strong the appetite for safe haven metals has become. Now, India is a great example of how this is playing out globally. Gold prices there hit record highs in September, 24 carat at over 10,800 rupees per gram. Now, analysts even predict prices could reach 125,000 rupees per 10 grams by 2026. That shows how global demand, currency weakness, and local investor appetite all amplify the rally. Now, when you put it all together, you've got the perfect storm. Falling interest rate expectations, a weaker dollar, political tensions, central banks stockpiling gold, and surging investor demand worldwide. Here's the real takeaway. Gold's rally isn't just about charts and numbers. It's about confidence, or rather the lack of it. When people lose confidence in currencies, in governments, or in markets, they turn to something timeless. And throughout history, that something has always been gold. So what do you think? Are we just at the beginning of a new gold supercycle, or is this rally going to run out of steam? Let me know your thoughts in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit that bell icon for more videos just like this one. If you're keen to learn more about finance, be sure to check out theindustryportal.com, link in the description below. Thanks so much for stopping by, and as always, keep growing, keep learning, and I'll see you in the next video.